Hey everybody, welcome to Trading the Close. My name is Gareth Soloway here at verifiedinvesting.com, and I'm going to explore the technicals on the data charts from today's action. We're going to look at the trades, what levels are breaking, what levels were recaptured after a pretty nasty early market sell that then was shut off like a faucet, right? And the market started to float back up. Still negative on the day, but again, you could see how the difference is. We had the early selling, and then as soon as we got to about 10:30 to 11 a.m. Eastern time, the market saw lack of selling and the float came back in, bringing us back to really mediocre downside versus major downside from the start. Let's take a look at where the indices are today. And if we look right over here, folks, we can see that the Dow down 250 points, which again is a little over 0.5%. It's not a big move, just a small move there. The NASDAQ taking a little bit of a bigger sell-off today, down to just under 1%, and the S&P down about 0.7%. Always remember that the S&P and the Dow are on either sides. Usually the best performer oftentimes when the NASDAQ is down is the Dow percentage-wise. You can see, again, almost 0.5% difference. And then the S&P is usually somewhere in the middle because it has a little bit of the tech stocks in it and also a little bit of the safety stocks like a Home Depot, a Walmart, and other names like that. So, again, that's kind of why that performance is like that. Now, today we saw oil inching higher. You guys know every single day for the last 2 weeks or so I've been saying the chart on oil is for the first time in a while slightly bullish, and we continue to see that today up about 1.3%. Gold today inched a little bit lower. It's still just holding on to key support. But again, as I said last week, it's hard to read right now. Gold is on this pivotal point where it may break down or it may get a little bit of a bounce. I'm starting to lean more towards another leg down based on the price action, but not high enough probability yet to put money on the table in that direction. Bitcoin today was down early, and this is fascinating, folks. So Bitcoin right now is up about $900 on the day, trading at around 94,500. But this was the kicker about Bitcoin, and this is something I've guided you guys to before, is that early in the day when the stock market was getting crushed in the first 30, 40 minutes of the trading day, Bitcoin was down to 92,000, even below 92,000, which is a major technical support we've been talking about testing, right? Then the stock market began to float higher, and guess what? Bitcoin floated back up. So we see that same sort of price action continuing, where again, in big market sells, Bitcoin goes down, but if the market floats back up, Bitcoin comes right back. Risk on, risk off. That's the way it is. Heat map wise, a lot of red out there, which makes sense. All the main indices are red. One standout here is NVIDIA gaining about 1%. That's actually kind of been an underperformer recently, so it is kind of coming back a little bit. Google only down 0.38%. So again, you know, some big names out there down a lot, some big names just down slightly, but generally that's a lot of red on the heat map showing us how the markets were generally doing today. All right, couple things to go over here. So let's go over to the S&P intraday chart, and I just want to show you guys this. This is your intraday starting at 9:30 when the stock market opened. We were gapping lower. We looked at that today in the game plan and how the markets were looking like a pretty sharp drop. It actually continued for the first 30, 45, 50 minutes, and then look at when that selling stopped right there, and the float came in, and then really we're just kind of floating into the end of the day. You're seeing a little bit of selling here into the close, but for the most part, it's not as nasty as it was early in the day. S&P daily chart, very clear and robust chart here. Let's go back to the big board here and take a look at this, and what we can see on this chart here, right, is that kind of wedge pattern here where the S&P kept on hammering, and then eventually broke down, and then it does a classic retrace right there and gets rejected. And again, you can see that's technical analysis 101, where again, once you break the level, you go back to the scene of the crime. You can actually see it over here, right? So over here, and I don't go back too far here because it would just be too small for you guys to see, but here you went up, you hit, you consolidated, you broke down, and then guess what? You went right back to the scene of the crime. That's essentially what just was replicated right here with us breaking down and then retracing and then getting sold into. And this happens over and over again. You can have a trend line that's flat where this happens, where it's like this, breaks down and goes right here and then goes lower. You could have an upsloping trend line like this, where price is hammering, breaks down and goes back right there, and then has that bigger sell-off. But my point of bringing this to your attention is that patterns tend to repeat over and over again because they're replicating human emotion. And remember, and ask yourself this, do you think someone 30 years ago, 100 years ago, 500 years ago, were their emotions any different? Did they have fear and greed like we do in this day and age? And the answer is yeah, they did. Absolutely. And so it makes sense that the patterns, and this is why technical analysis can work, replicate over and over, and why technicians, technical analysts can generally, if they do things right and they learn, generally predict with high success of what the levels and price action will ultimately do. Very, very interesting stuff. Just always good to keep an eye on there. All right, let's go through some of these big cap tech. Apple today down about $3.50. It is coming down. I still have first target around 236 to the downside. The puts that I alerted you guys that I bought, I know a lot of you guys picked them up with me. So far, we are in the money on those, although obviously I'm looking for a much bigger move down. Half will be taken off at first target, and then I'll let the rest run to the downside. Today we saw NVIDIA closing just slightly higher. I just wanted to show you this. This is a replication one more time of that same sort of price action, right? So again, if we look at this, we can see again, here's a trend line, up, down, up here, kind of kisses here, but then again, over here, down, up, consolidation, breakdown, and then guess where it goes? Retrace and technical rejection right there. And so essentially you go back to the scene of the crime. And again, I'm pointing this out over and over again in today's Trading the Close because for educational purposes, this is unbelievably important that once you break trend lines like this, it's very hard for it to get back above. More likely than not, 80% of the time, 70% of the time, price gets rejected. And so the reason I point this out is that you don't want to get fooled, right? When you break a key trend line, you don't want to be like, oh, it's going into another bull run. Let me go long here, which is what a lot of retail does, thinking it's going to go like that, but they're not understanding the chart. They're not seeing the chart and understanding the scene of the crime retrace where it gets rejected. Now listen, remember, when I say 70 or 80% success rate, what does that mean? Well, it means 20 to 30% of the time it could break through there. So you always want to be understanding that it's not that something doesn't work. Everything in technical analysis is based on probability. And so there's going to be always, if you have 100 times of a chart setup, 20 of the times it's just not going to work. And you have to accept that. Just be like, okay, listen, this was one of those 20, but if I did this 100 times, I would have won 80 times out of that 100. And that's what you're playing for as a technician. You're not playing to win every time. It's not going to happen. I guarantee you that. I can look at myself and say that doesn't happen absolutely every time. But the key is it's about the probabilities, and that's how big players win. They understand that it's a probability game, and you're playing the long game, essentially, with many, many trades. Amazon here today, down just slightly on the day. Nothing new here on Amazon. The one level I'll be watching on Amazon here is you have a trend line right through these lows. I would expect Amazon in the next week or so to come down into this level, and then that'll be the big test of does it bounce and go back to new highs, or does it bounce a little bit and then break down. But right now, that trend line is a very firm trend line. Google has already come into its trend line, high pivot to high pivot to high pivot, and then a rejection here, a retrace. Didn't really get, there's really no scene of the crime on this one because it wasn't above the line. But again, it did fall today. And then Microsoft, classic bearish pattern here, right? So here's your flagpole right here. And here's your flag. It has not broken down yet. It needs to break through this line. But once that happens, you can probably do a measured move and factor in where the target would be. You would take that high to that low. And then wherever that breaks, you would do a measured move. That same distance would bring us down to about a 338 target on Microsoft. All right. Next up, let's take a look at Bitcoin today. And this is kind of what I alluded to earlier today. It was just awesome to see the price action doing its thing. If we just run over to this chart again on the big board, we can see that Bitcoin, again, trading between these two lines. But look, today's low right down there. And here you had it here, 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 and then even right back here, and these highs. Okay, all through here. So again, very obvious that this is support. It pierced it today by a little bit, and then it floated up. That float again coexisting with the stock market initially selling, which pushed Bitcoin down, and then floating back up, which helped Bitcoin come back up. But again, this is your resistance line here. This is your support right down there. You're watching as a trader, which way does it break? And whichever way it breaks, I actually think there'd be a significant move. If you break here, I think you go back all the way up here, which could be as high as 115 on Bitcoin. If you break here, you're probably going down to the 74, 75,000 range. So this is something that probably we will figure out in January. I think at some point in January, which is just a few days away, it might not be right away in January, but at some point we'll get that bigger move break, and then it's going to be very fast and crazy to that next target price. Gold today, not much movement on gold. Little trend line right here. We're kind of hovering right on this line. Again, down move, sideways inside bar. That's a little more bearish. So again, the bias for me, it's been kind of flip-flopping a little bit here. Slightly bullish, slightly bearish. Again, it is slightly bearish based on today's price action. Granted, not enough to really solidify and say, okay, let's put some money in that direction. But again, right now I'd be leaning, if I had to the downside on gold. If we look at silver today, silver continues to have that bearish pattern play out. You can see we've already talked about it here. Down move, this is a bear flag. The breakdown, little bear flag again. I thought it might go up to this line and get rejected, which would have been the scene of the crime. It didn't even have enough energy to go there, and now it's just down ticking here and likely headed down to that target. Where's that target for me? It would be right down here. Again, notice what I'm doing. High pivot, high pivot, high pivot, a breakout. This would be a retrace to the scene of the crime. You would be a buyer, or at least I shouldn't say you. For me, I just speak for myself. You would be a buyer for a move up, or I would be a buyer for a bounce back off of this level here. Oil today continued to creep up, heading towards 73. That was that bias that I gave you guys. Once we got above this line and confirmed, again, close above. We don't know the direction yet. It could be a fake out. No confirmation. Confirmed. So now it's a confirmed breakout, which means this is major support. It defends it, it hammers, 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 can't get through because it's major support, and then the move up right there to the upside. And again, I still think we're going to 73, maybe 75, maybe even 78. Lastly, natural gas. What a move on nat gas today. There aren't many people that can say they shorted it today and made money on natural gas since it was up 12%, but I can say that today with the players in the live day trading room. All right, we nailed it. The Pierce of $4. We said, all right, I looked at the factors. We had 8 up candles on the 10-minute in a row, so we had a time count there. We had the 4 even number. We had some other signals, divergences starting to be produced, and so we shorted it right up there, made a nice score on the downside. Now, again, that was a day trade. On a swing trade, it hasn't achieved that 440 level yet, but still, you have to, tip your cap to what a move in natural gas today, although it did pull back significantly off the highs. All right, so let's go over the schedule now. Tomorrow is New Year's Eve. The markets are open a full day. Now, again, my guess is any action that we're going to see will be in the first half of the day, much like today. If they're selling, you could see that shut-off valve by noon, if not earlier, and then a float coming back in. Or maybe we just open neutral to higher and float the entire day. Wednesday markets are closed, and then Thursday, we are now in the new year. Now, don't expect volume to return to normal on Thursday and Friday. I think it starts to, but it's really because it's kind of a midweek New Year's. Some people will still take off those next couple days into the weekend. It's really next Monday that I would expect fully back, normal, past these holidays, gangbusters, let's go. All right, guys, that's my update for today here at Trading the Close. I do want you to stay tuned. I have something to play for you right after this broadcast, but as always, thank you for your support here at Verified Investing. I really appreciate each and every one of you spending a few minutes with me each day, whether it's for the game plan or Trading the Close. Have a great one, and stay tuned for this. Take care.
All right, so taking a look here, looking at the token transfer, of course, you can transfer all the tokens you have, of course I have none, directly into your token wallet. And it looks like you're able to get these XP boots that increase your experience as you learn. This is really cool, right? Not only am I learning all these amazing courses, and let's just go back to the courses really quick. Courses, modules into relationships, career-wise, different skills. I get actually rewarded with tokens to learn about things that are beneficial for me, and it's totally free. Definitely something I'm interested in. So next episode, we'll dive deeper into the courses. So I'll see you then.